Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and we have a very special guest today, a returning guest, Alessio of leadingtrader.com. We're going to get his insights on what's going on in the markets. Now, headline news today, the S&P 500 has had the best 50 days ever, and of course, I think we're going to get into that a little bit. But we've seen, it is what it is. We've seen the stock market move up very strongly, and in response to a lot of money that got thrown out in the system. So we're going to pick this apart here a little bit. Obviously, lots of dysfunction when it comes to what we're seeing on the streets, rioting in the US, and obviously the COVID-19, the coronavirus. Is that even in the news anymore? I don't even know if we're doing that anymore. So Alessio, thanks for coming on Crush the Street with me today.
Pleasure to be with you. Thanks, Kenneth.
So let's start off with, yeah, of course. Thanks for coming and sharing your time with us. Let's start off with the S&P 500. This is big news right now because it's came off of that crash. What are your thoughts on what we're seeing? Does this surprise you, or what are your thoughts?
No, it doesn't surprise me at all. It's interesting something you just said a few seconds ago, Kenneth, which I think is quite relevant, which is the fact that we're not talking about the COVID-19 coronavirus for some time now. I think it's been at least some weeks, or maybe at least most recently as well. So I don't know if you've seen my previous videos from March to April, Kenneth, but people who have will know that even when the markets were crashing, I was basically saying, look, this is a once in a generation opportunity, and that I'm going long, and I'm going to build, essentially that I'm bullish on the markets, and that I'm looking for a bounce, a major bounce on the markets. And I actually said back in March, during the crash that was occurring, I said very likely we're reaching capitulation territory. Don't get me wrong here, I'm not trying to say I caught the exact bottom, I didn't. I actually think I got a bit early as well. I might have gone a bit early. But what I was trying to do as the markets were crashing, and let's be honest with you, Kenneth, I was kind of worried myself. I think I actually came down with a mild version of the coronavirus, very likely in March. For some reason, I started coughing out of nowhere. I never usually cough like that. And I remember a couple of nights I wasn't feeling well. I remember I had a high temperature or something like that. I was not feeling well at all in March. And I actually got really worried for myself, for my family. But I think that added to my general anxiety. But as I'm sure you know yourself, Kenneth, as any experienced trader knows who's watching this show, you cannot allow your personal emotions, your doubts to overwhelm you. You've got to stay objective. You've got to stay looking at the charts. A good friend of mine once said to me, I'm sure it's famous now, it's a famous saying, make decisions based on what you see. Trade what you see, not what you think. Because if you were listening to your thoughts, anybody who's listening to their own thoughts, that would have been a disaster. So, and one thing I will say this, Kenneth, is I look at what people are typing in the comment section. And sometimes it's not great. Let me tell you, sometimes reading the comments isn't great, because when the majority of people disagree with you and they think you're crazy, and people were saying I was crazy back in March when the stock market was crashing. I remember to 2,500, 2,400, then to 2,300. I'm talking about the S&P now. I don't really care about the Dow that much. S&P is my thing. So when the S&P was just dropping, and I was saying, wait for the bounce, wait for the rally, and this capitulation is coming. Capitulation is very, very close. And I was saying that I'm bullish on the market. People were saying, no, you're crazy. Look at are you not paying attention to the news? I mean, people were saying to me, this is a pandemic that's going to cause the market to go beyond what happened in 2008. Beyond 50%. They were saying that the market would never recover from this. People were saying, look, record unemployment, what else were they saying? Depression, all that depression talk, which I'll be honest with you, it is certainly sad for the majority of public out there. It's a sad situation out there. I understand that. But bottom line is, you got to stay objective. And one thing I kept saying was, look, the market is not the same thing as the economy. Well, in regard of what the economy is doing, regardless of the virus. which is that we haven't talked about the virus on the news. On the news for the past week or so, at least the past couple of weeks, most of the news has been about the riots and the chaos in America, which is interesting because that is actually another, I think, reason why the markets have gone up. Because statistics show that when a certain subject matter goes out of the public, what's the word I'm looking for? The public thoughts, or
like headline news.
when a specific subject matter,
it's out of the focus.
Consciousness. Sorry, yes, that's right. Consciousness. What I say. So when a specific subject matter, which is very negative, eventually comes out of the public consciousness, usually markets tend to bottom. Well, usually beforehand anyway. But bottom line is that increases the probability of a market bottom. So a good example is that the markets in the year 2001, the markets didn't bottom and rally until people stopped talking about the terrorism thing. In the year 2008, 2009, the market didn't bottom until the headline news reduced their talking about foreclosures. And in other words, don't get me wrong here. I'm not saying they don't talk about it completely. I'm not saying they stop talking about it. I'm saying the frequency of articles and searches online for those specific keywords reduce. And if you look at Google Trends, I have actually a chart of Google Trends, which I could, if I had it, I could show to you. It shows that the frequency of online searches for the term coronavirus and COVID-19 peaked in the middle of March. I think the search term for COVID peaked in, I think, March 22nd, a day before the market bottom. And the search terms for coronavirus, I think, peaked somewhere in the middle of March. Bottom line is, you will see the peak, and then you'll see the market bottom. In other words, the peak for the search, the Google Trend search for those terms. And then you'll see the market bottom about there. Now, this has not been proven to be correct, this particular theory that I'm saying. People will have their own theory as to why the market bottom. People will say the Fed. They'll say, some other thing out there. And bottom line is, it doesn't matter. I just go with the charts. That's what matters to me.
Alessio, that was a very interesting, and you brought up something interesting as the Google Trends and the searches and correlating that. But let's acknowledge what did happen. We had trillions of dollars thrown at the system. What are your thoughts on what happened with stocks? Would we have seen the bottom much lower, in your opinion, and maybe with the same bounce, at timing wise, but just with different valuations? Because we have to acknowledge, someone like Warren Buffett, he largely missed this bottom. I mean, it was big news that he's 40% cash, and the market kind of went up without him, and he didn't see good valuations at the time to deploy. So what are your thoughts on this?
Yeah, I got to be honest with you, Kenneth. I'm surprised by that too. You would think a guy like Warren Buffett, who's usually a contrarian. I mean, this is the guy who said famously, the famous phrase from Warren Buffett, be fearful when everyone is greedy, be greedy when everyone's fearful. And then I was surprised when I learned that Buffett was saying that. And I think a lot of people probably followed what Buffett was saying, and they stayed out of the market. There was a recent MarketWatch article from mid-May that said the majority of fund managers were still thinking this is a bear market rally. So the majority of fund managers, 2/3 of fund managers, were still bearish until the end of May. I've been very surprised. Some of the people I have respected, let me just tell you, some of the people I've respected in the trading industry, in the trading environment, people that I know have also been quite bearish. And this is the thing, this is what makes trading exciting and also extremely, what's the word? This is by far the most difficult profession in the world, because when you're going against the majority opinion, especially when the majority opinion includes people who you respect, traders like Warren Buffett, for example. I'm not saying you respect him. A lot of people don't like him. But when you hear people that you generally are big names in the trading industry, in the investing industry, like Warren Buffett, like other famous names, who are saying they're bearish, they're out, they think it's a bear market rally, and then you want to go against what they're saying, as I did. I started buying stocks in the, end of March and beginning of April, right around the turning points. And when it's not easy, let me tell you, it's not easy. It's extremely difficult. And let me tell you, I didn't enjoy much of it. I did not enjoy doing that. People think that trading is extremely enjoyable and it's exciting. It's exciting, but it's also, what's the word I'm looking for? It causes anxiety. It's not enjoyable. Actually, it's the opposite of enjoyable. So I'm not saying I enjoyed any of that. I was feeling sick anyway. I think I came down with some kind of sickness. And let me tell you, I did not enjoy one moment of it. Having said that, I did quite well in this rally, and I'm looking to exit my position pretty soon. I've actually taken profits quite a bit already as it is. But what I will say is something you just mentioned, just going back to where, okay, the Fed thing. That's right, you're talking about the Federal Reserve. So yeah, I mean, a lot of people have said, well, obviously the Federal Reserve is causing this market rally. I'll be honest with you, I actually hold an opinion on this that's going to shock some people. It's going to probably anger some people as well. I don't think it's been proven that the Federal Reserve is the reason why the markets go up or why markets go down. There's actually very little evidence to back this up. And I know this may shock some people. I know the consensus view is that the Federal Reserve is the reason why the markets have gone up. I take a different opinion. Now, I don't want to go into too much detail because I want to make a separate video about this in the future. I'll show you some important charts about this. But here's what I will say. If you look at the headlines back in March, ask yourself this question: how many times did the Federal Reserve try to intervene during March to save this market crash? And how many times did the Federal Reserve succeed? I'll tell you exactly. Federal Reserve first jumped in to save the market from crashing around about the beginning of March. Do you remember that? The emergency rate cut? What did the market do? Had a bit of a bounce, and then boom, it went down again. Then I think it was March 15th, or about March 15th. Federal Reserve came in and they did some, again, more intervention. They tried to do more rate cuts, and they tried to do more, essentially what they're trying to do is QE. So again, they try to save the market. And the headlines at the time, if you remember, on March 15th was the Federal Reserve is coming in to trade to save the market. Guess what happened the day after the Federal Reserve did that? I think it was March 16th or 17th. The market had this worst day, the day after the Federal Reserve tried to jump in. I mean, that was the day when they essentially the stock market, I think was the day when the stock market gapped down so severely that they had to stop. I mean, the market literally came to a halt. So you would think, well, hang on a second. If the Federal Reserve is the reason that the markets go up, then why didn't the market do anything at the time? Why did the market did the opposite of what the Fed was doing? 3 times in March it failed. Okay, and the reason actually is this. I do a lot of research into why the markets do anything. I do a lot of research into the statistical records. Actually, I need to give a huge shout out to a fantastic guy who is an expert on this. His name is Jason Geppert of Sentiment Trader. He's I think the world's #1 expert on sentiment and statistics. And he was saying back in March something I listened to at the time, and he was absolutely right. People were the sentiment, the mentality of people in March during the crash was 3 words: get me out. That's it, get me out. So that's the reason why you see these big gaps in the market, okay? Because when people were seeing the market crashing, despite the Federal Reserve trying to save the market, and then the headlines is all about the virus, pandemic, and then people are looking at their brokerage accounts, right? People look at the brokerage account and they're seeing negative every single day. I mean, any human being, it's a very human reaction. You're thinking it's the end of the world. You're thinking, most people were thinking, if I don't get out now, I'm going to lose all my profits, or I'm going to lose my money. People were saying on the television, all these experts are coming on TV saying this pandemic is going to last the rest of the year. The market's going to go down 50%, all that kind of stuff. So yeah, it's obvious why people were selling and thinking, get me out. It's because the sentiment was extremely bearish. And I think, and listen, here's what I will say, Kenneth. The reason why I think the market bottomed is because supply demand. Eventually, the supply demand cycle, as anyone knows this, once everybody has sold, once everybody is bearish, once everybody has sold, who is left to buy? No one. No one was left to buy. Back on March 20, I think it's March 23rd, the bottom. On that date, practically everyone who could have sold. S&P was about 2100, 2190 by that time. Anyone who could have sold had sold. Short sellers was heavily short. Okay, so what happens in that situation? Well, what that means is just like a saturated market, when something becomes extremely saturated with sellers and bears, the opposite happens. The forces of demand open up and the market begins to go up. Why? Because then you have professional investors then jumping in, buying those discounts, buying those bargains. People like Ackman was buying, I remember. He was heavily bullish in the market. When I listen to Ackman, and I don't listen to usually these pundits on television, but he made a very excellent point. He said that everything on the charts was saying to him, this is bullish, you got heavily bullish. On the charts, were saying to me that the markets were going to bounce too. We're seeing heavily oversold conditions in the charts. So that's why I got long. That's why I was bullish on the markets.
Well, congratulations on that. Alessio, and I know you got to go here in short order. I want to get your thoughts on gold and silver and your thoughts on Bitcoin. Maybe you can combine your thoughts since they're directly related, indirectly related as it pertains to the economy.
That's okay. Kenneth, we can do it in this now. 10 minutes is fine. So basically, as far as gold is concerned, yeah, I'm bullish on gold. I'm bullish on silver. I think both of them will do quite well this year. Silver is in a kind of a channel. Just like, if you look at the chart of silver, it's crashed in March. Now it's rallied so far from March. The question is this rally for real? It depends. You're seeing a lot of optimism right now in gold and silver. I think that optimism may be okay. Usually in the start of a bull market, you do see some kind of optimism. But I would say this, for silver to remain in this bullish rally, it needs to maintain itself in that kind of a channel. I would say it needs to remain above that. If you put a trend line on the chart of silver, it needs to remain above that to keep this momentum going. If it falls below that, I'd say if it falls below, for example, some key levels like 16.5 or 17 levels there, it might be in a bit of trouble there. But I think so. Personally, though, I think for the moment, the way I'm seeing it, gold and silver probably will do quite well. Gold is doing some kind of consolidation right now, which is actually quite bullish despite that. But I think once the consolidation comes to an end, we'll see it going back up.
And then let's get your thoughts on cryptocurrency, Bitcoin, kind of maybe overarching what your general thoughts are, and then where we are right now with Bitcoin approaching 10,000.
Yeah. So at the beginning, I mean, back in March, my initial thought on Bitcoin was, I mean, I'm not trying to say that I caught the bottom. I did not. My initial perspective on Bitcoin when it crashed in March was that we're probably going to see a bounce and then a retest. But I changed my mind, I would say early April, when you begin to see kind of a 5-wave move off the bounce. And I follow Elliott wave theory, and I had to change my mind. In early April, when Bitcoin was around 5,900 to 6,000, I think it was about 6,000 to 6,400, 6,500. I had to change my mind back then. So again, I didn't catch the bottom, but I think I caught pretty decent size when at that point, Bitcoin was consolidating. It wasn't dropping. It was holding its own. In fact, any dips were getting bought back up. So I changed my mind and got bullish on that. Yeah, you're right. It did go to the 10K level. My perspective is this, something I mentioned in a previous video as well. We're coming up against this trend line. So if you go back to the 2017 highs, draw a trend line from the high all the way to where we are right now. We're seeing this kind of a trend line, downtrend line. I think if Bitcoin can break above that downtrend line and get above 10,360 probably, if it stays above that level, then there's a very good chance of actually be able to potentially push itself into a bull market. However, I said this in a previous video as well. This does not mean necessarily that this year has to be the year when Bitcoin is going to go, all the way back up to the highs of last. What I mean is this is not going to be easy, is what I'm trying to say. Yes, Bitcoin probably will break out of that trend line sometime this year. I'd say probably the next few months. But I'm still expecting another dip because I see this rally from March as a wave one. Wave one of a 5-wave move that's going to go eventually to 50,000 and more in the future. So if this is wave one, which it could be, I think very likely probably is, then what I would like to see is breakout above 10,000 and above. I would say I'd need to see Bitcoin go at least into the 12,000 range, and then another dip. I would need to see another drop back below 10,000 again, and I want to see that that drop below 10,000 being bought. I want to see people getting back into Bitcoin once it drops back below 10,000 again. So essentially, I need to see a double dip. Right now, we're still below 10,000. I need to see it once more above 10K, go to 12K, then drop back down below 10K again, which it often does. Often when price breaks resistance, as I'm sure you know, Kenneth, break above resistance, back below support, back below, test that level again, and then off we go. That's the kind of pattern I'm looking for a wave one and then a wave two, and then we start wave three towards our long-term targets. That, I think, is where we're going in the long term for Bitcoin. In the short term, well, anything can happen. In the short term, you're probably going to see a lot of this volatility, a lot of this sideways noise is happening right now. Right now is not pretty. And I would say this is not a great trading environment right now for Bitcoin. I would not want to be trading Bitcoin at right now, because you're seeing a lot of whipsaws, a lot of choppy action, a lot of false breakouts. No, this is not an easy market at all. I would wait until Bitcoin shows its hand. Either bulls are going to win. Either the bulls are going to win, we're going to see a move above this trend line resistance above 10K, or bears are going to win. Which one do I think is going to win? The way I'm seeing it right now, I think bulls will become the winners at the moment, the way I'm seeing things.
Well, I like it when you confirm my bias. I'm very fond of Bitcoin. I think Bitcoin's got a lot of potential, and I like the analysis with the waves. I mean, that really brings some understanding to people buying it, owning it, and supporting higher prices and just that higher adoption. So, Alessio, I want to appreciate you for coming on Crush the Street. Thank you so much for your time. If people want to learn more about you and the work that you do, please let them know where they can go and what they can expect to find.
Yeah, sure. People can watch our YouTube channel, obviously on youtube.com/Alessio Rastani. Or they can come to our website, leadingtrader.com. So yeah, thanks very much, Kenneth. It's great to be on your show. Thanks very much again for inviting me. Good to be here.